What I do know is that they're all fiat, they're all worthless, they're all, if you pull back and look at the big picture, being debased, and therefore anything real, and that includes gold and silver, but real assets, property, houses, whatever. In real terms, I am bullish on silver. I am concerned. People call me names and stuff. I am concerned about its industrial impact going into the recession, being still in team hard landing. I mean, it's just a fact that silver's industrial aspect has had a larger influence on that market. So it doesn't pay to be religious about these things and ignore the facts.
Lobo Tiggre, CEO of Independent Speculator, recently shared his thoughts on gold, silver, and uranium. He's optimistic about silver, though he raises concerns about its industrial demand given recession risks. Lobo also explores the role of geopolitical factors, particularly how Russia's potential strategy shift could influence silver demand. According to Interfax and Bloomberg, Russia's latest draft budget outlines plans to significantly increase its precious metal holdings, including silver, potentially signaling a new asset for its wealth fund. Lobo further discusses the weakening value of major currencies, noting that the dollar's purchasing power has been on a clear decline since it was decoupled from gold over 70 years ago. He highlights data from the Atlantic Council showing the US dollar's share of global reserves has dropped, indicating that while still dominant, it's losing ground to other currencies.
What I do know is that they're all fiat, they're all worthless, they're all, if you pull back and look at the big picture, being debased, and therefore anything real, and that includes gold and silver, but real assets, property, houses, whatever. In real terms, those things are going up. And if I'm not a chartist, but to my mind, and I've said this many times, but for that one person out there who hasn't seen it yet, if there's just one chart about money that you need to look at and understand, it's the long-term chart of the dollar's purchasing power, even using CPI, which is giving the other side much too much credit, but the declining value of the dollar versus the gold dollar exchange rate, aka the price of gold. It's a giant X. It's a little bit of a curvy X, but it's a giant X. Over the 70 years since the dollar was severed from gold, gold was free to have a little bit of price discovery, even if manipulated or phony, but some. It's a giant X. The dollar loses value, and the other ones lose value as well. I'm not just beating up on the dollar. All fiats are losing. And lo and behold, we have gold hitting all-time highs in other currencies before the dollar. So if the dollar is the last man standing, right.
There we go.
Right. So, and there's one of these on my website somewhere, but if you superimpose the gold on that too, it's a giant X.
It goes the other way, yeah.
And by the way, this makes it look like, oh, it lost so much more at the beginning. Well, that's because once you go from 90 cents to 10 cents, right, going from 9 cents to 1 cent is on a percentage basis just as much, but on this scale showing the whole dollar, the 9 cents to 1 cent just looks tiny. So this makes it look like the dollar's been losing less value more recently, but that's an artifact of scale. It's actually not true. And this is partly why the X looks curvy, like I was saying.
Yeah.
It's just an incontrovertible fact. I am bullish on silver. I am concerned. People call me names and stuff. I am concerned about its industrial impact going into the recession, being still in team hard landing. I mean, it's just a fact that silver's industrial aspect has had a larger influence on that market. So it doesn't pay to be religious about these things and ignore the facts. And this thing, it's a report. Are they even going to do it? Is it Putin rattling the West's cage? Just, who knows? The guy's a master chess player. It could be any number of things. But even if they do that, I mean, it's just silver is so much bulkier than gold. I would be very surprised if it amounted to much. But okay, let's say it really happens and they really start socking away a large amount of silver. That would, in fact, constitute a new end use of sorts. Like, 10 years from now, they might be forced to liquidate it or whatever. At some point, that silver could come back to the market. But while they're accumulating, that would be a new end use. That silver isn't coming back in the market. It's not going into photo panels. It's not doing anything else. It's just sitting in a vault somewhere in Russia. So that constitutes new offtake. If it was substantial enough, I do think it would matter. But yeah, I think it's premature. to say that it's going to happen at all, and if it'll happen on a scale enough to matter.
Lobo predicts that the Federal Reserve's ongoing rate hikes could impact the labor market, possibly leading to a recession. If so, this could boost the value of precious metals like gold and silver amid rising inflation. Inflation has started picking up again, with the core producer price index climbing 2.8% year over year. During high inflation periods, gold has historically served as a reliable safe haven, reaching record highs in 2024 as the dollar's purchasing power continued to drop.
What's different is I was expecting, based on past behavior, they would drop the ball, bad things would happen, the Fed would tighten too much, too high for too long, according to mainstream economics, break something, right? The Fed breaks something, typically, the labor market. There would be bad things happen. And then as the recession became undeniable, or that it was coming would become undeniable, then the money helicopters would fly. So my thesis was never we're going to see years of soup lines and that sort of thing. My thesis was that the mainstream medicine of throttling the economy to deal with inflation would throttle the economy, bad things would happen, and then the money helicopters would fly again. The fiscal dominance thesis says, or what it's starting to look to me like it may imply, the money helicopters have been flying all along, maybe in stealth mode, maybe without big, huge announcements, or not even stealth mode. Like the grossly misnamed Inflation Reduction Act is a huge spending bill. Okay, that was years ago. You say, well, yeah, it was voted on years ago. Appropriations happen subsequently, and then the spend takes time before shovels hit the ground and the money starts circulating around. This is, classic example of long and variable lags. What I'm saying is I'm still in the hard landing. There's a difference between, rosy cheeks due to health and rosy cheeks due to makeup. And, you can stimulate an economy so it looks healthy, but it's not the same as organic, healthy, internal growth. So it does matter. But in terms of inflation and GDP and the kind of numbers that economics models use and so on, and this includes investment houses, includes Wall Street, not just the Fed, not just the people in Washington, right? We may not get that undeniable hard landing. We may get a completely deniable hard landing. What I'm saying is I think the damage is still being done. And as you and I speak, we just got the JOLTS report, and it showed fewer job openings and fewer quits, which is really interesting. The quits rate, that tells you that the psychology is changing. It's one thing for the companies to say, oh, yeah, maybe we're a little worried. We don't want to hire so many people. It's another thing for these people who got all their stimmy checks and who had the great resignation and all this stuff, for the people to start saying, you know what, maybe it's not a good time to quit my job. At least I've got one, right? So I see the data still backing up my thesis. You don't go from zero interest rates to 5.5% without something giving somewhere. But if there's a lot of fiscal stimulus at the same time, that could be masked. That's the makeup, is what I'm saying, as opposed to the bona fide health of the economy. So we'll see. We are at crunch point now. It's rare for me to make predictions. As you know, I try to avoid the prediction racket. And certainly, as Doug Casey says, if you're going to make predictions, don't say when they're going to come true. Just make your prediction, right? But I sincerely believe, and I may be wrong, but I sincerely believe that we are at that point now where either I'm wrong, there is no hard landing, and the Fed pulled off its miraculous soft landing or no landing, or I'm right, and the cracks that we've seen appear and widen in the labor market, really since last July, that is serious. So, like, even in the few 2 months we have left in this year, I think we start to see this unraveling and then the response, or I'm wrong and the fiscal dominance has masked it and we get the soft landing or no landing scenario. But here's the takeaway, though. Never mind the theory. That's the macro theory. That's the freebie. Here's the pig, right? If I'm right, it's very bullish for monetary metals, gold and silver. It's bullish for anything real, because the money helicopters will fly and anything real will do well in that highly inflationary environment. If I'm right, however, it's too early to jump into some realish assets like oil and copper, because they always get hammered when there's recession news. Always. That's an unbroken track record.